Warren Buffett loves to purchase high-quality dividend stocks and hold on to them forever as the economy grows. This philosophy highlights the significance of dividend stocks for investors aiming for reliable income and sustained growth. As we step into 2024, the importance of pinpointing the best dividend stocks has heightened as the uncertain outlook of the current world economy. In this video, we will unveil 6 dividend stocks that have great dividend track records and have potential growth. For each stock, let's see how far we can go with an initial investment of $10,000. Number 6. KeyCorp. Ticker symbol KEY. KeyCorp operates as a financial service company, offering a range of services including deposit, lending, cash management, and investment services for individuals, businesses, and institutions. These services encompass retail banking, commercial banking, and wealth management. As one of the major banks in the U.S., KeyCorp serves customers nationwide and manages $186 billion worth of assets. After the banking crisis in March last year, the stock price has experienced significant depreciation. As of now, the stock is trading at $14.67 per share with a dividend yield of 5.60%. Impressively, KeyCorp has consecutively increased its dividend for 14 years. The company's consistent annual dividend increases demonstrate its resilience. Over the past decade, it has achieved a compound annual growth rate, or CAGR, of 14.06% in dividend. In such a high-interest environment, KeyCorp is still able to attract deposits and exceed the expectation. As for lending, it was lower in 2023 than in 2022 due to high interest rates. With expectations of the Federal Reserve interest rate cut in the second half of 2024, the lending is anticipated to improve. For a $10,000 initial investment, you will earn $14,270 after 10 years. The annual dividend is $809, or $67 per month. After 15 years, you would earn $21,462. This is a 2 times increase of the original investment. The annual dividend is $2,396, which translates to a monthly dividend of $200. Number 5. Canadian National Railway Company. Ticker symbol CNI. As the largest railway company in Canada, it boasts an extensive rail network stretching from the Atlantic coast to the Pacific coast within Canada and extending southward to the Gulf of Mexico, covering a total of 20,400 miles. Railway transportation is the most cost-effective method for moving goods over long distances. Utilizing railway can lead to significant long-term savings, particularly when immediate delivery is not required. One good thing about investing in the railroad industry is the stability, because this industry has a high entry barrier, so the competitors are very few. Various sectors heavily rely on railway transportation for the movement of goods, including coal, parts, forest products, and agricultural goods. They all benefit from the relatively low cost. Canadian National Railway has demonstrated steady growth over the years. The 10-year CAGR for revenue is at 4.76%, and the net income is at 7.97%, indicating the company's cost-effectiveness. The dividend payout ratio is at a reasonable 37.05%, leaving room for necessary investments and maintaining equipment. Most importantly, the CAGR for dividend is 10.93%. For a $10,000 investment, your portfolio could potentially grow to $24,631 after 10 years. The annual dividend would be $889 and equivalent to $74 per month. 5 years later, the investment would be $45,027. This is a 4.5 times increase. Now, the annual dividend is $2,754, and you would receive $230 per month on average. Number 4. Illinois Tool Works. Ticker symbol ITW. This company is part of the Fortune 200 list. It manufactures components, equipment, consumable systems, and specialty products, supporting customers for multiple businesses including automotive, construction, food equipment, and industrial packaging. Over the years, the company has consistently made more revenue along with growth and profit. In 2019, their revenue was $14 billion, and by 2023, it increased to $16 billion. The net income also went up from $2.5 billion in 2019 to $2.9 billion in 2023. The free cash flow also increased from $8.24 per share in 2019 to $10.19 per share in 2023. These numbers indicate that the company is expanding its business while effectively reducing the costs. Additionally, the company has consistently increased its dividend for 54 years, which makes it a dividend king in the market. For a company to qualify for Dividend King, it has to increase dividends for over 50 years. The current dividend yield is at 2.02%, and the CAGR is 12.98% in the last 10 years. For a $10,000 investment, your portfolio would be $37,274 after 10 years. The annual dividend would be $2,404, which is equivalent to $200 per month. If you wait 5 more years, your investment would be $94,744. This is a 9 times increase of the original investment. The annual dividend would be $11,472, and you would receive $956 per month. Number 3, let's see VC Properties Inc. Ticker symbol VICI. VC is a real estate investment trust, also known as REIT, focusing on experiential properties. As one of the largest owners of gaming, hospitality, and entertainment destinations, it has 54 gaming facilities, 39 experiential properties, and over 500 restaurants and bars across the US and Canada. The company is operating at a triple net lease REIT, which means tenants are responsible for the property expenses, including maintenance, insurance, and property taxes. Becoming a tenant of VC requires meeting high financial standards. The average rent per asset is $32 million, compared to $460,000 to other triple net lease REITs. The remaining lease term is at 42 years versus the average of REITs is at 11 years. This stability was evident during the pandemic, with VC achieving 100% rent collection in 2020. Investors appreciate this reliability. Currently, VC offers a dividend yield of 5.09%, and the CAGR is 10.05% over the last 5 years. For a $10,000 investment, your portfolio would be $37,483 in 10 years. The annual dividend is $4,489, or $374 per month. In 15 years, the investment would be $106,040. This is a 10 times increase of the original investment. So, the annual dividend would reach $21,174, and the monthly dividend is $1,765. Number 2, Visa Inc. Ticker symbol V. Visa is a digital payment company that facilitates transactions among consumers, merchants, and banks. With over 100 million merchant locations worldwide accepting Visa cards, there are currently 4.2 billion Visa cards circulating in the market at the beginning of 2024. Visa, MasterCard, American Express, and Discover are 4 major credit card networks in the US. Visa holds the largest market shares among all, commanding 47% of the market. This is a $502 billion market size. In comparison, MasterCard holds 42% of the market share with $336 billion. Every time we conduct a transaction either online or in-store through the Visa card, a fee is charged for the money moving across its network. Despite inflation, the CAGR for revenue in the past 10 years was 10.68%. This rate could have been higher if not for the pandemic in 2020. More importantly, Visa rewards long-term investors with an impressive CAGR for dividend of 18.18%. We can see this as a profitable business that can withstand challenges over time. For a $10,000 investment, your portfolio would be $45,050 after 10 years. The annual dividend is $1,435 and equivalent to $120 per month. 5 years later, the investment would be $118,286. This is almost a 12 times increase from the initial investment. Now the annual dividend is $8,820 and equivalent to $735 per month. Number 1. Home Depot. Ticker symbol HD. Home Depot is the largest home improvement retail corporation globally, offering tools, construction products, and services. With over 2,300 retailed stores across North America, it surpasses its close competitor, Lowe's, which has about 1,700 stores. Home Depot aims to be a one-stop shop for the customers, with a wide range of products in-store and online, fostering customer loyalty. The company has experienced growth alongside the housing market, especially during the 2010s and pandemic. Over the past decade, Home Depot's CAGR in revenue was 6.83%, and the net income is 11.28%. That shows the company is growing and did well in cutting costs. More importantly, the company has returned its profit to investors through dividend. The 10-year CAGR in dividend has grown 18.28%. Due to the Fed's interest rate hike in 2022 and 2023, Home Depot's revenue growth was a bit slower. But the revenue is still growing from $151 billion in 2022 to $157 billion in 2023, demonstrating resilience through tough times. For a $10,000 investment, your portfolio could grow to $53,469 after 10 years. The annual dividend is $5,794. This is equivalent to $483 per month. In 15 years, the investment would be $208,649. This is a 20 times increase of the original investment. Now the annual dividend is $55,079, and on average, you would receive $4,590 per month. These 6 stocks are all great options for long-term investments. Based on your unique situation, buy and hold the stocks that make sense to you as long as possible, like Warren Buffett. Thanks for watching. Be sure to hit the like and subscribe button for more helpful tips like this. See you in the next video.